Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economies of both Russia and Saudi Arabia. Now, I don't think I've made a video before linking these two economies, but the obvious linkage is that they're both dependent on oil revenues. Russia derives around 30% of its total budget from oil sales. It used to be about 40 or 45%, but that's come down as the total volume of oil that it's selling has come down. But Saudi Arabia derives over 50% of its revenues from oil sales. At the last estimate, it was around 60%. And they're both members of OPEC Plus. Saudi Arabia is a founding member of what was OPEC, and then Russia joined when it expanded to OPEC Plus. And they're two of the largest oil producers within that consortium. And interestingly, OPEC Plus have just announced another large increase in output for September. And this follows on from the previous increases. If we have a look at this table, it shows what OPEC Plus has been doing dating back to November 2022. So that was around 6 months or so after the start of the war in Ukraine. And what we saw in 2022 was that initially oil prices rose significantly following Russia's invasion of Ukraine, which benefited all of the oil producing countries because they were selling their oil at higher prices, which is obviously good news for them, meant more revenue coming in. However, in the second half of 2022, we saw oil prices falling as a result of the slowdown in the global economy. And in order to try to keep prices high, which is sort of what OPEC Plus had done historically, at times when demand softened, they have cut production to try to keep prices up so that they're enjoying more revenue for the sale of their oil. And in November, it was announced that between them, they were going to cut 2 million barrels per day from the production. Now, that had an initial impact of increasing oil prices. However, it's very difficult to offset the market. And so oil prices started drifting down again. So in April of 23, OPEC Plus announced that it was going to cut an additional 900,000 barrels per day, meaning that the total cut by that time was 2.9 million per day. And then in November 23, as prices continued to soften, they announced that they were cutting a further 2.2 million barrels, taking the total cuts over the previous 12 months to 5.1 million per day. And in the middle of 2024, they announced a further cut of 760,000 barrels per day. So in total, almost 6 million barrels of oil per day were cut from global production. And that was all designed to keep the price of oil high. Just before we go on today, I want to talk about today's sponsor, investing.com. Now, I'm an avid investor. I'm always looking into the stock markets to find opportunities and interesting companies. And investing.com is absolutely fantastic because it has a huge database of information. Not surprisingly, because investing.com operates artificial intelligence and picks out stocks every single month that it believes will beat the market. It's using all of the different metrics and looking at the massive database that it has. But in addition to doing all of that for you, it also has its own AI assistant called Warren AI. So this is similar to ChatGPT, except the benefit is that Warren AI is using all of the database that investing.com has. So you can ask it any question you like relating to your investment concepts or ideas or theories. So I've asked it here, what's happening with Nvidia today? And it will come back with lots of detailed information about the share price, what's going on with the company itself, and then whether or not it thinks that now is a good opportunity. And I think from my point of view, having that sort of database and information at your fingertips is absolutely fantastic. And the great news is that investing.com has extended its summer sale, so you can subscribe for a 50% discount plus an additional 15% for being a Joe Blogs viewer. So if you're interested in that offer, please click in the description below. For what we've seen since April of this year is an unwinding of that situation. So the first announcement in April was that OPEC Plus were going to increase their production, the first increase that had been seen for almost 3 years, by 138,000 barrels per day. So only a relatively small increase. However, since that time, we have seen monthly announcements of additional increases. Firstly, it was 411,000 in May June, and July. And now we've seen an increase of 548,000 in August and 547,000 in September. So you can see that in terms of the cumulative impact from the 5.9 million barrels per day cut in the middle of 2024, that's now down to 3.3. So we've got an additional 2.6 million barrels of oil per day that's being put back into the global economy. And the problem that this is causing for both Saudi Arabia and Russia is that by increasing the amount of oil, it's tending to have a negative impact on the price. So the price of a barrel of oil is going down every time global supply increases, because very simple economics tells us that if demand is stable for anything and you increase the supply, then the price will go down, because to encourage people to buy more, because you're selling more into the market, you need to offer it at a better rate. But what we're seeing here is OPEC Plus have announced these huge increases in the production of oil, and that's definitely going to have a negative impact on the economies of both Russia and Saudi Arabia. And we'll have a look in some detail in a moment. But before we get there, I just want to ask anybody that hasn't subscribed yet to please hit that subscriber button, because I'm trying to get to 500,000 subscribers. And if you could help me, that'd be great, because it really helps me with the algorithm and also puts a smile on my face. So if you haven't subscribed yet, please smash that subscriber button. Now, this chart shows the movement in the price of Brent crude oil over the past 5 years. And you can see, as I mentioned earlier in the video, that following Russia's invasion of Ukraine, we saw oil prices rising above $100 per barrel. In fact, they got up to around $120. However, we then saw the hangover in terms of the global economy slowing down, and prices fell down to less than $80 per barrel by the middle of 2023, which was when OPEC Plus decided that it was taking action, so it embarked on these series of cuts to try to drive the price up. But as you can see, over the last couple of years, that hasn't really happened. And the current price of around $68, $70 per barrel is the lowest that we've seen since the start of 2022. And that's bad news if you're an oil-producing nation. Now, in terms of how OPEC Plus works, each of the nations that have signed up to the alliance agrees to a certain level of production. So when those cuts were announced, all of the countries had to agree that they were going to cut their own production. However, it's been reported that many of the countries were actually producing more oil than they were meant to. And Saudi Arabia was very unhappy about this. And they want to now punish some of those countries by increasing the production across the board, which potentially will drive down the price. Now, Russia, interestingly, was given a target for June. However, its production came in below that target. And that raises the question as to whether Russia now has production problems. Is it able to actually produce the amount of oil that it is meant to? Or is it having problems as a result of the sanctions? Because if Russia can't actually sell the oil, if it's being hit by the sanctions and therefore prevented from doing the deals, then it doesn't want to pull the oil out of the ground because it doesn't have anywhere to store it. And if we look at this table, it shows the increases dating back to April of this year that were announced by OPEC Plus, and the amount that Russia have increased its production by. And I can see on the far right-hand side here that Russia's percentage share of the total OPEC output is around about 15%. However, in terms of these increases, Russia has only been producing around 12.5%. So that's less than its pro rata share. And that doesn't really make any sense, because if you're an oil producing country, you want to produce the maximum amount to maximize your revenue. Obviously, if you're selling more barrels of oil, then you'll get more revenue in, and therefore you'll have more revenue to do all the things you want to, like funding the war in Ukraine. But Russia isn't doing that. And that definitely raises a red flag in terms of whether Russia is struggling with its production levels, because it would be crazy not to take up your full quota. Now, as I mentioned at the start of today's video, both Russia and Saudi Arabia are now in financial distress. I've talked about Russia a lot on the channel, but it derives around 30% of all of its revenue from oil. Those oil revenues have been falling as a result of the falling oil price. And also, Russia has got a lot of other strains. It's been dipping into the National Wealth Fund to keep the war in Ukraine going. And if the price of oil does continue going down as a result of these production increases from OPEC plus, then that's going to hurt the Russian economy. Every dollar that it loses from the sale of a barrel of oil is going to have a 9 million times effect on Russia, because it's producing around 9 million barrels per day and it's exporting around 6 million. So every dollar is $6 million worth of revenue lost. And potentially, if we're seeing 5, 10, 15, $20 falls, then that's going to have a huge impact. And of course, Russia also sells its oil at a discount to the global price in order to encourage countries like India and China to take those volumes. So this increase in OPEC plus production is going to hurt the Russian economy. But interestingly, Saudi Arabia is also struggling right now, and I'm not sure whether anybody or whether everybody is aware of this. This chart shows Saudi Arabia's fiscal balance dating back to the end of 2021. And the scale on the right-hand side of this chart goes from $20 billion positive at the top to $20 billion negative at the bottom. And the first thing to note about this chart is that the majority of quarters that are shown here over the past 4 years are below the line. So they're in negative territory. Basically, Saudi Arabia has been running a fiscal deficit. And you can see that every single quarter since Q4 2022 has been below the line. So Saudi Arabia is losing money at the moment. It's spending more than it's earning. And you can see that in Q4 of 24, that figure came in at around about $16 billion. And in the first quarter of 2025, it was around the same level. So cumulatively, this is very bad news from Saudi Arabia's point of view. And if we have a look at this chart, which shows the current account going forward, so we're projecting forward in years here, you can see, again, the scale on the left on the right-hand side here goes from $150 billion positive at the top to negative $50 billion at the bottom. Actually goes beyond 50 billion. And you can see that in 2022, Saudi Arabia recorded a very positive and healthy result of $150 billion positive for its current account. So that meant it was basically earning more money than it was spending, and so it was building up a cash balance. In 2023, that positive figure fell from 150 billion to around 30 billion, and then in 2024, it recorded its first negative result since the COVID pandemic in 2020. But in terms of projections, it's estimated that for the next 6 years, Saudi Arabia is going to remain in deficit, and that deficit is coming in at around about $50 billion in every single one of those years. In fact, it's forecast to get larger, and by 2030, it's going to be up to $70 billion. So what's going wrong in Saudi Arabia? Why have they got themselves into this position? Well, the bottom line is that they're budgeting oil prices to be much higher than the global rate. This chart shows the fiscal break-even price that Saudi Arabia needs to basically break even in its economy. So we've got two different lines here. We've got the blue line, which is the fiscal break-even, including PIF domestic spending. And then we've got the red line, which shows fiscal break-even. Sorry, that's excluding. And then the fiscal red line includes all of its project finance investment spending. So you can see that the blue line, we've got an estimated price in the blue line of $96 per barrel. And the red line requires the price of oil to be $113 per barrel. Now, just as a reminder, the current price of oil is around $70 per barrel. So that is nowhere near the break-even price that Saudi Arabia needs it to be. In fact, it's significantly less. In fact, if you look at the red line, we're not far away from it being half of what Saudi Arabia needs it to be. And with these increases in OPEC Plus's production, it's likely that the price of oil is going to go down. It's unlikely to go anywhere near $96 or $113 per barrel. It hasn't really been there for a very long time. We had a brief period following the invasion of Ukraine when it spiked, but that was exceptional circumstances. So Saudi Arabia isn't really being very prudent in its budgeting, and nobody believes that the price of oil is going to hit $100 per barrel. Maybe It might go to 70, 75, maybe 80. But if the global economy slows down, it could easily drop to 60 or even $50 per barrel. And that would be extremely bad news from Saudi Arabia's point of view. And this chart shows general government expenditure versus its non-oil revenue. So this is looking at how healthy the Saudi Arabian economy is, excluding oil. So you can see that non-oil revenues, the red line, have been increasing over the past 8 years or so. And they're now up to around about $130 billion per year. However, government spending has been increasing at a faster rate. And in 2024, government spending was 366 billion, so over 230 billion more than its non-oil revenues. And that's one of the reasons why Saudi Arabia is now running all of these deficits. And if we look at the same data that we looked at from Russia's point of view for Saudi Arabia, how much they're taking up of these increases in OPEC plus production shows really interesting data, because Saudi Arabia is actually taking up more than its fair share. So you can see here the Saudi increases are shown barrels per day. So it was 35,000 in April, 130,000 in May, 120,000 in June, 115,000 in July, increasing to 160,000 in August and 155,000 in September. And if we multiply the number of days and the price, the estimated price of the oil, and the extra barrels per month, you can see the total additional revenue that Saudi Arabia will earn from the sale of this increase in oil production. And it's a significant number. In September, it's estimated to be 321 million, 342 million in August, and 242 in July. So when you add up all of these figures, it's significantly into the billions. So this is one of the reasons why Saudi Arabia is increasing oil production, because more oil sold means more revenue in. But the problem that it has is that as you increase the production, it pushes down the price. So the price per barrel is less, therefore your profit margins are less. And even though you're making more total revenue, your actual profit is going down. And there is a danger that if you increase the production too much, prices go down too far and you actually start making less revenue overall. So what's the summary and conclusion today? Well, I wanted to post this video because we're very interested in what's happening in the Russian economy. And I think everybody is aware that Russia is under huge financial strain at the moment, and it's dependent on those oil revenues. So Russia doesn't really want to do anything that's going to push down the price of oil. It wants to maximize the amount of revenue that it's earning from its oil sales. So high oil prices usually mean good news for Russia because it means more revenue, and therefore they'll have more cash. But unfortunately, Saudi Arabia, who's the leader of OPEC Plus, is also in financial difficulty at the moment. It's spending significantly more than it's earning from its oil and gas sales. And interestingly, Saudi Arabia, rather than trying to maintain the price of oil at a high level and therefore maximizing its profit margins, it wants to increase the volume of oil that it's selling to increase the total amount of cash coming through the door, despite the fact that that will likely push down the price per barrel and therefore reduce its profit margins. And there's a really fine balancing act here, because if Saudi Arabia and OPEC Plus overcook this, if they put too much oil back into circulation in the global economy, at a time when the global economy is already on a bit of a knife edge as a result of Donald Trump's tariffs and the increase in trade costs that are going to come along with that, all countries in the world are now seeing their products being priced at a higher level in the USA as a result of those tariffs. So that's likely to lead to a reduction in sales, reduction in revenue, and therefore a reduction in profits for all of the companies selling into the USA, which is the biggest single market in the world. The US is the biggest economy. So we've already got a situation where everybody's worried about what's going to happen with the global economy. And if the global economy starts to slow down, by definition, that will reduce the demand for oil. And when you reduce the demand and supply stays the same, then prices go down. But if you reduce demand at a time when production is increasing, so supply is going up, it will have a double whammy impact, because you've got reduced demand and increased supply. And what that will do is accelerate the fall in price. And that's the problem from Russia's point of view. They don't want OPEC Plus flooding the market literally with oil at a time when demand is softening, because we could see the price of a barrel of oil falling from the current level of $70 to maybe $60, $50, or even worse than that if we go into a downward spiral. So Russia, I think, is naturally very cautious about oil production levels. However, Saudi Arabia, because they need more capital, they need more cash to keep funding all of the expenditure that's going on in the country at the moment, wants to increase the production from OPEC Plus. Now, Saudi Arabia and Russia are the two leading parties in OPEC Plus, and so far they've been on the same page. Russia doesn't want to be a dissenting voice. It hasn't challenged Saudi Arabia with all of these proposals to increase the amount of production. But I'm sure that behind closed doors in Russia, they won't be happy with Saudi Arabia's approach, because it is definitely reducing the price of oil per barrel, which is going to hurt all of the oil producing nations, because even though they may sell a little bit more oil, they're selling it at a lower price. And if prices keep going down, then eventually that will really hurt all of these economies. So the overall summary of today's video is that Russia and Saudi Arabia, the two biggest players in OPEC Plus, are both struggling financially at the moment. Both of the economies are running a deficit. They're spending more than they're pulling in terms of their oil sales. Russia would rather keep its production as it is and maintain high prices. Saudi Arabia wants to increase production to increase the volume of revenue coming in. They've got totally different viewpoints at the moment, but as it stands, OPEC Plus is continuing to increase its oil production. That's likely to force down prices, which will hurt both of these economies because they'll be earning less per barrel for their oil sales. And if this continues over the next 6 to 12 to 18 months, we could see both of these economies going into a tailspin and getting into severe financial difficulty. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and thank you so much to everyone that's supporting me. If you bought me a coffee or sent me a YouTube super thanks, really appreciate that. And if you've signed up as a Patreon or a YouTube member or a Buy Me Coffee member, thank you for that support. Really helps to keep me motivated. And here's something to put a smile on your face.